Yeah, Fineqia is a Canadian listed company, and we're both an issuer of exchange traded products in digital assets or ETPs, and we invest in a portfolio of interesting emerging digital asset companies. So our aim is to be the leader in enhanced yield exchange traded products and be a leader also in the whole digital asset space. So our products on the ETP side are very different to normal conventional products. Not only do we have exposure to the underlying price of the asset, we also have enhanced yield to generate higher returns. We have two products at the moment, a Bitcoin Enhanced Yield product and a Cardano Enhanced Yield product. And they're listed on markets in Europe, including Euronext, giving them very wide investor exposure. And our shareholders also get the benefits of being exposed to the growth in our emerging digital asset investments, which are beginning to mature and generate very impressive returns.
You describe Fineqia as a digital asset and investment business. What does this mean in practical terms for investors?
So in practice, what we do is we create and manage exchange traded products. And we do that in a very special way. We're the pioneers in deploying to decentralised finance, which creates enhanced yield. That's a very, very different thing. Nobody else actually does that in the marketplace at the moment. Most people are just creating assets which are around core exposure just to price variations in the assets. We're getting assets which, not only are we getting exposure to the asset, we're also creating enhanced yield so they get higher returns. For an investor, they're gaining exposure both to the fees we get from managing the exchange traded product assets, and also what we're seeing now is the emerging digital assets which we've invested in are beginning to mature and generate high returns.
Why did you choose to focus on ETPs as the core of your strategy?
Because ETPs enable investors to actually access mainstream digital assets, but critically in a properly regulated way, because often the digital asset world is a little bit wild, and I think the comfort of actually being able to gain exposure to those assets in a properly regulated manner makes a big difference. So they're listed on exchanges. They're basically combining traditional financial instruments with the innovation of the blockchain. So we're kind of, I suppose, bridging the gap between traditional corporate finance or traditional capital markets and the new world of digital assets.
Martin, Fineqia has launched the Bitcoin Yield ETP, so that's YBTC. What sets this apart from the many passive Bitcoin ETPs already on the market?
The difference is we generate superior yield. So we're not just getting exposure to the underlying asset, we're also getting enhanced yield.
Martin, can you walk us through how that mechanism works?
Yes, of course. So investors in our exchange traded products gain exposure both to the growth in the underlying asset, but also yield. And the way we do that is some of the money put into the product is utilized in DeFi protocols to generate enhanced yields. And the profits from those, we don't take in cash or other tokens, we take it in Bitcoin. So that adds to the underlying Bitcoin the investor owns. So not only does the investor get the benefit of having an exchange traded product with all the liquidity and safety and things, they also get exposure to the underlying asset and enhanced yield, and they don't have the hassle of managing wallets, worrying about the security protocols.
The Cardano Enhanced Yield ETN, so that's YADA, another of your products, how does it complement YBTC in the portfolio?
I suppose it's all around product diversification. So Cardano is a very interesting protocol. It's the market leader in security and speed. And so it gives a different type of exposure to the investor. And in the end, what we're trying to do is enhance yields that our investors get through exposure to different networks in the digital asset space.
Why was Europe chosen as the first market to list these products, and how important are exchanges like Euronext and Vienna to your growth?
So Europe was the obvious place, because Europe really is a pioneer. It's got probably the most mature digital asset regulatory regime. So it enables a lot of digital assets to be listed in Europe, and it also enables exchange-traded products with enhanced yield like our product. So that's very important. Being on an exchange in Europe obviously enables us to reach more investors. It helps us as a company because it helps us in terms of our profile. It helps us access new pools of capital. It actually enables us to passport into different types of countries as well, which I think is quite useful going forward.
You've partnered with Salion Operations on DeFi architecture. How does this partnership strengthen your offering?
Well, so we started working with Salion in April this year, and they are the advisor on our Bitcoin product. And basically they have deep domain expertise in managing DeFi protocols and generating yield. And for us, for our investors, working with very blue chip partners makes a big difference. And their track record is brilliant. In the last 3 years, they've been generating 5-6% yields plus across Bitcoin products. So basically they're the best in the market, and we need to work with the best in the market.
Many investors still view crypto ETPs as risky. How does Fineqia manage transparency, regulation and risk to reassure institutions?
There are several aspects of that. One being on a regulated exchange gives a lot of visibility. So clearly you have visibility around price, a lot of security aspects. It's really important, particularly from a DeFi perspective, that we have superior due diligence. We work with a number of different providers across a number of different protocols. And being on exchange actually enables the underlying investor to understand what are the real underlying assets contributing to the note, and also be able to see what's happening to daily valuation. So it's around visibility, and also working with blue chip partners to make sure that the whole operational side is deeply efficient.
With total assets under management around $50 million, how do you see Fineqia competing with larger issuers like 21Shares or WisdomTree?
Well, number one, we're much better. But the key thing is we're specialised and differentiated. So our competitors tend to work on passive products which just give exposure to the spot price of the asset. We are totally focused on generating yield. And I think that's going to be the future of these assets. People are going to look and move away from plain vanilla products into enhanced products. And because we're first movers in that space, we've got exposure to most of the growth in the market. And we've established ourselves as the first movers. And that's also being part of the European exchanges. It's enabled us to brand ourselves properly.
Beyond Bitcoin and Cardano, are there plans to expand into other assets or yield-generating products?
Yes, of course. We would clearly look at some of the other main protocols. So obviously you can look at things like Ethereum and Solana. We want to look at having baskets of yield-generating tokens. So it's basically looking at how we can make sure that we can provide the highest yield products for our clients.
We've seen institutional adoption of crypto accelerate this year, Martin. What's your view on how demand is evolving?
I think we're seeing some quite dramatic changes. I mean, it's clear to me that crypto is now an institutional asset class. We're seeing not just growth in institutional investment, we're seeing acceleration, and that's a continued acceleration. We're also seeing, which is interesting for us, more and more people trying to buy into crypto-based, digital asset-based ETPs to gain exposure. So we've seen a big increase in that in the last year. So there's something like 200 billion worth of assets in those products at the moment. We've seen in the last 18 months something like close to 60 billion in growth in Bitcoin digital ETP assets. In the last 3 months, 10 billion increase in Ethereum ETP assets. So it's becoming a mainstream asset class, and it's accelerating.
Martin, what role do you see DeFi playing in bridging traditional finance with blockchain-based investing?
Well, what DeFi does is it really provides the tools, especially around yield generation and income, to package proper institutional regulated products. So I think that's the key to it. And what we're seeing in the last year is a big increase in that. So now over 50% of institutions are involved in crypto lending. And there's a stunning number, which is total value locked has increased by 70% in the last year. So more and more people are adopting these kind of DeFi-based products to enhance the returns they generate from their crypto exposure.
How do you view the current state of the crypto market, particularly given the volatility we've seen in Bitcoin and Ethereum?
Well, actually, that's a really interesting point. If you look at Bitcoin has definitely become a real store of value to institutions. Most of the new investment is coming from institutional investment. And the kind of volatility has come from mainly macroeconomic factors. So it's a bit like gold has always been seen as a store of value, a hedge against uncertainty. So when uncertain things are happening, the price of gold goes up. The same thing's happening for Bitcoin. It's now accepted. It's got a similar status. If you look at Ethereum, there's been a huge amount of extra investment in Ethereum. And that's because some of their they enable new things to happen. They've got a lot of protocols around DeFi. They're enabling tokenization. They're enabling real world assets. They're enabling layer 2 applications to link to layer 1 blockchains, which add to enhanced speed and scalability and efficiency of blockchains. So they're doing all sorts of great things. So demand for Ethereum is up. So overall, what we're seeing is the big picture is reduced volatility, greater demand, and more efficiency in the market. Obviously, we're going to have short-term fluctuations, but if you contrast that with what's happening in other stock markets, it's not really massively different.
Martin, what's next for Fineqia, both in terms of new products and also the broader strategy for growth over the next 12 to 18 months?
So I think in new products, it's all around creating more yield-generating products. We're going to look at baskets of tokens, as I mentioned. I think there's a lot of growth potentially in tokenization of real-world assets. And we're going to be increasing our assets under management basically by creating new products. We'll also look to list in different exchanges across Europe to widen our investor base. So I think we're going to see fairly dynamic growth over the next 12 to 18 months.
Martin, I hope you'll keep us updated on your progress. Thank you so much for coming through today.
It's a pleasure.